Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today we're going to talk about social media, some investment capital that's coming into the industry, as well as growth opportunities, where that money is going exactly, with a nice little chart from MJ Business Daily, and then the quality of the earnings from companies. So investment options all the way down to social media influencers and whether or not they draw some money. On the line with us is Dan Kimmis from Good CBD Products. The Marijuana Business Daily has an article talking about how social media challenges continue for the cannabis industry. There's a lot of people that have had their accounts shut down. I will just bring out one example, which is Best Buyer. She's a photographer. She's not selling any cannabis. She has pictures of farms that do, but never a price or anything. And yet, I think 6 or 7 or 8 times she's had her account shut down when it almost reaches that 100,000 person mark, which is a substantial mark. That means that you're going to start really drawing in some serious revenue. And yet, how many times can you just have your account shut down and have to start over again? And Instagram isn't the only one. They're owned by Facebook. Facebook kind of started all of that. So it's really become challenging when you can't advertise in the regular marketplace on billboards in some places or TV. And you're really limited. Social media is one of those last options. And now that's even being challenged. Each to their own. If you want to take a picture of your flower or video of your dabbing, it's not for me. I'm not your target market. But you're going to get shut down, and ultimately that's the price you pay. That's the cost benefit for any company, including an entrepreneur or somebody that just wants to be a social media.
It's selective censorship, though. Let's face it. I mean, again, you're not going to get turned off for taking a picture of your watch, whether or not you and I go look at the account or not. Mm-hmm. Okay, you are going to get turned off if what you're doing is any form of consumption. Basically, again, it's an interesting time. The complexities of a market that is emerging, right? And at the same time, if it isn't your credit card processor turning you off because somebody wanted to give you legal money in the legal system to buy your legal product, mm-hmm. It's your inability to run your ad on Facebook where you've spent 3 years cultivating an account, right? Again, it's the myriad of complexities and challenges for small business in this emerging market are exactly why we do what we do, brother.
So to recap, in October of 2018, MarketWatch reported that Facebook would stop blocking cannabis-related searches, but just a month later, Facebook and Instagram shut down more accounts.
Yeah.
So what are the options? Like, what are the other places you can go? I mean, the article goes into, say, Twitter and Pinterest, which I don't know if you're going to get that much traction.
Yeah, but it's all conditional, right? I mean, again, yes, you can go there, but I want to go there. If I'm a business, investing in making that account is a significant cost, okay? It's time. It's time every day. It's interaction. We talk a lot about investing and the risk with investing. This is another form of, risk management, right? Because again, on a whim, a powerful tool for you, something you're relying on to drive revenue, right, can just be taken away.
It's unfortunate, but assuming that it's a fixed cost and you're paying your person $50,000 a year or whatever to run your social media account, that's a fixed cost, but peace of mind is having backup. So that's up to the individual to have.
Yeah, but how do you back up an Instagram account and followers, right? You run a second account?
Right. Well, you can't have followers. You can't back them up, but you can back up all of your content regardless of what platform it's on, YouTube or Instagram. You can always.
Yes. And again, thou shalt, right? Because again, ultimately relying on that arbitrary service as an example, right? To not just dell your entire folder. Mm-hmm. Again, you're playing with fire. And so the alternatives, right, are limited. I would say they're old school. I would say they're things like, go find key influencers and influence them. Because again,
and does that even work? Sorry to interrupt, but does that even work? We're looking at Instagram getting shut down. LinkedIn for me is the highest return on investment. LinkedIn is a business. Mm-hmm. So for me, that works. But that same Best Buyers posted on Instagram and had, I'll have to look at my phone because I took a screenshot, but after 2 days, On Instagram, she had 5,500 likes. And on LinkedIn, in the same amount period, 2 days, she had 14. So it's business, right? It's much, much different. And so will you get the same return on your investment just because LinkedIn allows you to? I get a lot of interaction because I do a business podcast. It's not going to work for everybody. But to your point, does it even work at all? So this other article from Fox News headlines or whatever has a story about an Instagram star who couldn't sell 36 t-shirts to 2.6 million followers.
Sure.
And then they follow up with asking the question, is the influencer bubble bursting?
Yep. So first, I'm a believer in that we are in post-influencer space. Okay, that's my theory. To that, I mean, the reality is each of these different platforms, Instagram, Twitter, etc. How many times has Twitter told you to go buy a hat and you did? Right? It's a good idea. Yeah. I'm an influencer. Not really. At the same time, one of the things that is interesting is these platforms are wonderful for disseminating media to customers that actually want the media. It's interesting because it's like, do you need the personality? Well, I think you need some personality, but really the information needs to be the star. Again, it's the pressing point of all of this. We can self-publish, and so many people publish essentially noise. And the outcome is you go to the internet and you're like, the internet's useless. What the hell? No, the internet is not useless. Ultimately, find the people who actually make real content, real data. Again, I'm hell-bent. That's why I'm going to the street, man. I go to the road because we get the real data. You might have a lot of followers, but you can't sell, 36 t-shirts to 2 million people.
There's something to be said about the engagement level where I've seen with terrestrial radio. There's a radio show in Seattle called The Men's Room, and they started making a beer, and people were huge fans, and they'd run out and buy the beer. And whether it was t-shirts or otherwise, they have a really strong following for people who like that content. If you're on social media and someone thinks you're cute, they're not going to buy your clothes. They just want to see you and what you're doing because they're stalkers.
The concept of the well-organized, well-run business that engages, that also uses social media versus trying to force it through social media. Again, make a cool product, share it with people, make some cool t-shirts, build a community. That is old school. Now, put on top of that, now let's throw this through social media also, and watch. Yeah, you will. The people will come. They'll buy pretty much anything you make, and if you keep making quality, you will build a neat following.
I'm not going to name any names, but there's a friend of ours named Jake. He was a rec shop owner, actually a medical marijuana dispensary owner, and then he started working for another company kind of as a social media influencer, working with other social media influencers who have 50 or 100,000 followers. And on a private conversation, he had mentioned it didn't translate into dollars. People weren't coming into the store for him or the other person. So even his own opinion was that it wasn't drawing people in. And yet it's still important because there's literally billions of dollars. This Yahoo Finance article lists out that California has 3.1 billion in sales, according to ArcView and BDS Analytics. Colorado's and Washington are basically in second place with a little over 1 billion digital sales. So it does matter. People are trying to grab a piece of that market share, but without traditional forms of advertising and marketing, they're looking for influencers. And I think that maybe they've overpromised and underdelivered.
It comes down to what can you deliver as an influencer? And again, being able to actually clearly define that, boy, that is tough. Oh, there's a formula. But until you have the formula, boy, I think you're selling wind, right? I think you're just selling air.
A good example that I've seen where somebody's been able to execute is, again, Best Buyers with Cannabis. She's a photographer, and she's been able to go to small farms. She charges them probably a couple $1,000s to come out there for her time and her photography or expertise and her social media. She'll upload a picture of the farm, and then it might get picked up by High Times, which it has in the past, and then it'll get 10,000 plus likes. And that's definitely a strong return on investment for a small-time farm.
Yeah, okay. Oh, all right. But now I mean, I'm going to challenge you. Okay. But did that make sales?
Indirectly, it's adding to the economy of the cannabis industry because of the influencers showing something like high times. So there's another article from Yahoo Finance that says cannabis boom tempts investors. And a lot of that is coming from these influencers getting to small farms, taking pictures, and then creating FOMO. That fear of missing out is what's driving a lot of these investments and crazy ass valuations, where Green Growth acquired a multi-state cannabis firm, Moxie, for $310 million.
Right.
So according to Marijuana Business Daily, Green Growth Brands, a cannabis business based in Ohio, agreed to pay $310 million in stock, not cash.
Right.
Just
sure. Yes.
Digits on a screen, for a multi-state operator. They're based in Long Beach. They sell both recreation and medical cannabis products from 250 retail outlets. That's it, 250. From 5 states. That's crazy. That is a really small distribution. 5 states is great. 250 stores is small. And yet 310 million all in paper, not fiat currency, just stock.
It's a bet, a risk on both sides.
So the question I'm bringing up is, would those deals be so frothy without social media influencers creating a FOMO?
No. There's noise, right? Again, noise. And that's, how do you leverage it, right? And if you can leverage it into a $310 million pile of paper, good on you. And especially if that paper lands, right?
So there's a chart that shows that diversification enhances profitability of cannabis product manufacturers.
Yes.
So transitioning into how each of these companies can increase their amount of money is probably down to diversifying the amount of SKUs and not really about social media influencers.
Yeah, SKUs are interesting. And the ability as a cannabis company right now, when you look at, I want to diversify my line. I need everything, right? I got to make joints. I got to make balms. I need tinctures. Hey, I got to make a t-shirt, right? Because in the end, all that bread piles up together to hit bottom line. And that's what's going to get you that deal.
So this is interesting with the chart. It shows about profitability. So you mentioned revenue, but what is actually bottom line profit? With 1 to 3 products or SKUs, 72% of those are going to be unprofitable. Whereas if you have more than 15 products or SKUs, 64% of them will be profitable. So really it's about adding the number of products, whether that's white labeling or just making your own. That's probably going to bring you more revenue than a social media influencer.
I got to call you out and tell the truth here. This is the reason I contribute to the podcast, because I learn, okay? I don't know. A lot of this stuff I'm learning. Sure, I get the field data. You help me understand it. That's an example of something right there where that's counterintuitive to me. And at the same time, it explains so much of what I deal with in the field.
Yeah, the article goes in to say that it's really about economies of scale. The more you produce, the cheaper it is and the more profit you can make. Headset goes into some pretty good detail about locations and overall retail shops. If a retail shop has less than 1,500 SKUs, they're not going to be as profitable either. And when looking at 2016, just 3 years ago, no store had more than 2,000 SKUs, and now almost a quarter, about 1 in 5, have 2,000 to 2,500 SKUs or products on the shelf. That's a lot to try and sift through. It's a lot of competition. So ultimately, the stores that have a higher number of SKUs are making money. Those that have fewer SKUs are making less money. And so it's really about how you operate and probably less about your social media influencer. At least that's what I'm inferring from the data. But ultimately, it's all about, at the end of the day, if those companies can remain in business to pay whoever they want, social media influencers or otherwise. And so the quality of the earnings is going to be critical during the next phase of the cannabis wave, which is going to be consolidation. Those that don't want to consolidate or merge will have capitulation, which is a forced merger. And so that's going to be on the next horizon. And so this article, again, from MJ Business Daily, talks about why the quality of earnings is critical in a cannabis M&A.
Different states are in different states of evolution, right, in the market. But West Coast cannabis is in this very interesting moment in time where Washington, Oregon, consolidation, Cali, really starting to roll, Colorado, a very interesting experience set. And again, all happening at the same time, and each one, anywhere from $1 billion to a multi-billion-dollar market.
Those first mover advantages of being, West Coast and legalizing first has that opportunity to exit the industry first as companies go to Canada, or even Canadian-based companies getting capital either from an IPO or RTO or any other private fundraising. They're coming back in here buying hemp or CBD, property, plant, and equipment, so that they can write that off, whereas you can't with 280E on cannabis. They're also just buying whatever they can, producer, processor, retailers, and crazy valuations. And so how they're coming up with those valuations are interesting. Right now, most businesses are looking at EBITDA, and there's always accounting ways to manipulate that. Right now, what you're seeing is the S&P 500 has reached 3,000 points for the first time in history. But at the same time, you're seeing the most amount of companies filing on IPO that aren't making money. It's the highest in history right now. And just the amount of speculation, right? So you really need to look at earnings before you just dive in because you have FOMO and you want to get some cannabis ETF. A lot of these companies right now are manipulating their numbers. So especially the trailing 12 months before an IPO or a buyout, they're increasing their returns and valuation often 7 to 8 times higher, eager to put money on the bottom line to make themselves look better, just like a company filing an IPO.
Basically, we're paid to cut the crap, right? To get out there and go find out, is this actually real? It was a year ago when all of a sudden, at the different parties, I start getting introduced to all these Canadians, right? Where I'm just like, well, what are you doing down here? Right? Oh, yeah, we're scouting around, we're buying this, we're looking at that. Again, a funny market and a funny time. The whole idea that somebody would invest their bread, their hard-earned bread, right, without doing true due diligence, like multi-layered due diligence, like due diligence with some extra due diligence, to me is just, in this space, boy, you're chucking your bread to the wind. Do your due diligence. That would be my,
There's a lot of people who are eager to throw money around. I know a guy that threw $250,000 and then another $500,000 with doing zero due diligence, even though that was his job. Yet the other ways to look at ways to make sure you're not going to get screwed is look at the discounted cash flows. You can easily see from an earnings per share whether it's going to be accretive or dilutive. So that's pre and post merger. You can look at competitive analysis. If there's public comps available to look at acquisition comps or transaction analysis, that's great. And we haven't even yet seen a leverage buyout. You're going to see companies in the US that have low leverage because they can't get banking. They have a high free cash flow or EBITDA, and then they have a low price to earnings. That's the perfect leverage buyout from someone coming from Canada, taking a loan out from their IPO, and then coming back in and buying these companies in the US with very, very low leverage and market caps.
I'm working with a pal right now, okay, who's basically the whole watchword is, well, they want to buy us so they can show revenue, right? We have X amount of revenue monthly, and they're coming to buy us so they can turn right around and say, look, we're now showing revenue.
I'm working with some Canadian companies right now and trying just to add the number of SKUs and private labeling. And then now that they're filing an IPO in September, they're all about trying to buy companies, which is reducing their return on assets by buying all of this equipment. But Canadians, for some reason, really love that IP. They love exclusivity, and they feel like that's what's really going to differentiate them. Whereas what I'm seeing from the data is increase the number of SKUs, regardless of whether you're private labeling or owning. I think it's a short-term gain. People keep talking and saying, this is a marathon, not a sprint. And I keep saying, you have first mover advantages. You can either sell out now, take that capital and reinvest it, unless you're a one-trick pony. Otherwise, stay in the game and become Larry's Handy Mart in the world of 7-Elevens. That's your prerogative. I would sell out and then take your next idea and sell out. Take your next idea, sell out. That cycle of money is really what's going to compound your return rather than just sitting and waiting for valuations. Because what's going to happen is the speculation is going to dissipate, and then you're going to have people with a fine-tooth comb looking to see from a valuation, a value investor trying to reduce the amount that you're worth so that they can get a better bargain. And that's really what it's going to boil down to, is these people who are holding out and not selling out on the West Coast are going to have a reduced valuation over time.
Well, the trick of knowing when, right? I have a self-made guy that I work with. He's an actual billionaire. Okay, and I go find stuff for him and stuff. One day he was telling me a story, and what he said to me is, "Look, a real entrepreneur goes where the money is." Right. And that's what an entrepreneur does and I've actually gone all the way where at one point I took a few months off out of the industry and went over and was working in robotics again, because that's where the money was. Right. And the whole thing of knowing when to sell your business. And I would say, following the Cron's advice, or Josh Kincaid from the Talking Hedge, look, don't be attached and understand that, this is the thing. If you're good, yeah, turn that thing and go make another one. Right. Again, I mean, it's kind of broad brush, but go. That would be my word of advice.
Yeah. So ultimately it's really about just getting the data, looking at the best options for you to optimize your business, to make it more efficient, more effective, to sell more. I'm not sure if it's necessarily social media influencers, or just that's one piece to the puzzle.
I think noise is valuable, but I also think the value is nominal. I think you need some, but I think if you're all noise, I mean, ultimately, you got to have a product, you got to have sales. Sales are driven by good product and complex distribution channels. Mm-hmm. That's really, and then, awesome branding, right? And some component of someone running around saying, hey, look at this, it's neat, you got to try it. But in the end, just, woo, I got an Instagram account here. Yeah, you can't even sling t-shirts through it? Come on now.
So on August 14th, there's a panel for cannabis media at the World Trade Center in Seattle for the Talking Hedge. It's going to be a live panel, and people talking about cannabis media, the challenges with social media influencers, all the way down to traditional media. So stay tuned for that on August 14th at the World Trade Center in Seattle. Cannabis media.
I'll be there.
All right, and with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. I'm out.